The allowance method is one way that we've talked about you can write off receivables or uncollectible accounts. When we looked at it before, we talked about how we would record it, the different types of entries we might make, but now I want to look at where the number actually comes from, specifically when we create or adjust the allowance account itself. So there are three ways we can create or adjust that account. You can use something called percent of sales. You can use percent of receivables. And you can use aging, or sometimes referred to as analysis. Oh, can't really read that. Hang on. There we go. Of receivables. Okay. So let's go back to the first one, percent of sales. It is exactly what it sounds like. I'm going to make an adjusting entry. That one that we showed you before, we're going to redo it. And I'm going to base that entry off of the percent of sales I estimate that I will not collect, or that will be uncollectible. So I'm literally going to look at credit sales. So let's say that this year we had, I don't know, 1.2 million. Well, in credit sales. And we estimate that 2% of those will be uncollectible. So that gives me a total of $24,000. That's the amount that I want bad debt expense to be. So that's going to be the amount that I'm going to use when I make my adjusting entry, when I adjust the allowance account. So you've got bad debt expense. We're going to debit it for $24,000. And then we have our allowance account. Allowance for doubtful accounts. Just going to write allowance to save space. We credit it for $24,000. Now we've adjusted that account for the year. Again, based on percent of sales. The focus on percent of sales is more on the income statement side. Again, it's on the bad debt expense. That's what we want bad debt expense to be. Under the allowance method, this entry is the only time that we have any impact on bad debt expense. Up to now it has a zero balance. Now it has a $24,000 balance. So again, that's going to be the amount of our adjusting entry, because that's the focus. Percent of receivables is very similar, but now instead of taking a percent of the sales, I'm looking at the percentage of receivables that we're estimating to be uncollectible. So here, let's say that you have total accounts receivable balance of $52,000 for your company. And we're estimating that 10% of those will not be collected. So you're estimating $5,200 to be uncollectible. The focus with percent of sales, however, is on accounts receivable. So this $5,200 is telling us how much, or sorry, not with accounts receivable, but on the balance sheet, specifically with the allowance account. So the $5,200 is what we need the allowance account to be. So we're going to have to look at it. Let's say that right now our allowance account equals $1,000. We want it to equal $5,200. So I need to make an adjusting entry to get it to $5,200. Okay? So our adjusting entry is, again, bad debt expense and our allowance account. But this time, we're not going to have the amount of $5,200 in there, because again, the goal is to get the allowance account to equal $5,200. It already has a balance of $1,000. So to get it to $5,200, I need to increase it by $4,200. So to increase it, I'll credit it. So we're going to debit expense for $4,200, credit the allowance for $4,200. Now allowance will equal the $5,200 based on our percent of receivables. Now the third way we can adjust this is by using an aging or an analysis of receivables. It is similar to percent of receivables, but it gets more specific with the types of accounts we have. What happens with aging or analysis of receivables is you'll take your entire accounts receivable. So we're not going to use the same numbers, but for instance, before we had $52,000, what we could do is take that $52,000 and put it into age categories. How old is the receivable? Is it current? Is it 30 days old or 31 to 60 days old, 61 to 90? You put it in time frames. The older it gets, the least likely it is that we're going to collect it. If it's more current, then it has a higher probability that we'll get that money. So you're going to assign percentages to each age category as to what you expect to be uncollectible. Again, for current, it might be, that 0% is uncollectible, and for something that's only 1 to 30 days overdue, maybe it's 2%, or so you're going to have certain percentages for each age category. You're going to multiply the totals of those age categories by their related percentages, and then you're going to add all those up. That will give you the total amount that you estimate to be uncollectible and that you want the allowance account to be. Okay? You can look in your text for an example of one of those age charts, an aging schedule. I'm not going to recreate one for you now here, but that's how you would construct one and how you would use it. So let's say we've done that, we've constructed it, we've got all our categories, we've multiplied them by the percentages, and we have a total. So let's assume our total from that aging schedule is $12,000. That $12,000 is what I want the allowance account to be. So let's say that the allowance account right now, before we adjust, has a balance of $2,300. Okay? So, my adjusting entry then, again, we still have bad debt expense, and our allowance account. We need allowance to be $12,000 and currently it's $2,300. So how do we get it to the $12,000? We need to increase it by $9,700. So that's the amount of our adjusting entry. We increase the expense by $9,700. We increase the allowance by $9,700. Again, the focus here is on the allowance account. So we need it to be $12,000. It's $2,300. We're going to increase it by the $9,700. Now, let me give you another for instance, and this could impact percent of receivables or the aging or analysis of receivables ways to get our entry. What if I told you instead of the allowance account being a $2,300 balance, let's say that the allowance account now still equals $2,300, but it's a debit balance, which can happen. Again, the allowance account is estimated, so it might not always, be right on tap, or you might have under or overestimated. What if it's a debit balance? Again, your aging schedule still shows that $12,000, so I want the allowance account to be $12,000. If it's a $2,300 debit right now, what's my adjusting entry need to be? Again, it's still going to be that bad debt expense and the allowance account. But because it's a debit now, if I increase the allowance account by $2,300, that gets it back to zero. Then I can take it on the credit side for $12,000 more. So in total, I'm going to have to credit that account for $14,300 to get it to equal a $12,000 credit. So that's the amount of my adjusting entry this time. Because once I credit the allowance account for $14,300, it has a $2,300 debit balance. That will make it equal the $12,000 credit. Okay, again, if that's a little difficult, sometimes that may make perfect sense, but if for some reason you're having some difficulty, again, you're over here. You're on the debit side for $2,300. Let's say right here is back to zero. So you've got to come here first before you can get to that $12,000 here. So to get there, you've got to add both of these. So you have to add $14,300 to get it to equal a $12,000 credit.